The S&P Case-Shiller Home Price Index for December 2014 is in, and prices edged up slightly, rising 4.5% year over year, compared to November's 4.3% rise. So where does this leave prices in 2015? Let's bring in David Blitzer, chairman of the index committee at S&P Dow Jones Indices. So David, this seems like the same story we've been seeing for over a year now. Price gains slowing, right?
Yes, generally speaking, it is the same story, but under the surface, I think a couple of things are going on. First of all, we're getting more and more of a schism in the overall housing market. Existing home sales, existing homes, and in particular prices of existing homes, all look reasonably good. A 4.5% increase is more than twice the rate of inflation. Existing home sales are back where they really should be, or where they were back pre-2005, long before the financial crisis. That's the good side. The bad side is new housing construction and new home sales, which are running at about half the pace that they should based on long experience, and really don't show much signs of reviving at all. Housing starts finally made it 4 months in a row, barely over 1 million starts at annual rates. Right. They ought to be 1.25 to 1.5 million. So that's the mix, or the miss.
And prices rose the fastest in San Francisco and Miami. So what does that tell you about the market? Give us a sense of how certain areas are doing across the country.
That's a good point, because the other thing that's going on is the market's becoming very regional. The West, California, led by San Francisco, Oregon, Seattle, that area, and throw in Las Vegas and flow in Florida, especially Miami, those are doing very well. That's really a strong area. It's more than the traditional Sun Belt, because clearly you got Northern California and the Pacific Northwest.
Right.
And that's all good news. The Northeast and the upper Midwest, Boston, New York, Washington, Chicago, Cleveland, those numbers are running, they're barely keeping pace with inflation. Home prices are roughly flat after you take out inflation in the Northeast and the Midwest. So we're getting a bit of a split in terms of the regional activity, as well as having big problems with new construction.
All right, and going forward, where do you see prices going in 2015?
I think that we're going to keep both these splits between the old new construction and existing homes on one hand, and the regions on the other hand. I think we'll continue to see strength, but across the country, the strength is probably going to moderate a little bit, even in places like San Francisco. One difficulty we still have is the availability of mortgages, not the price, clearly. Mortgage rates continue to be fantastically low. It's a little bit of easing of credit standards, but it is a whole lot easier to get money for buying a car than buying a house. Maybe that should be. But by the way, the default experience looks a little worse for car buyers than it does for home buyers.
All right, and what about interest rates? Does this possible summer tightening of policy change your outlook?
I don't think it's going to change it dramatically. I think the Fed will move sometime this year. And if I had to guess, it's probably the third quarter, but we'll know more after 10 o'clock this morning when the Fed chairwoman speaks. I don't think that's going to have a big impact on intermediate and long-term rates. I don't think it'll have a big impact on mortgage rates anytime this year. Mortgage rates, we're talking about 2016, 2017, and hopefully by then we got a whole lot more new construction, so we'll have other issues to worry about.
All right, David Blitzer, chairman of the index committee at S&P Dow Jones Indices. David, thank you.
Good morning. Have a good day.
I'm Scott Gamm, and you're watching The Street.